Priscilla Barrera with the Investing News, and here with me today at VRIC is Steve Stakiw, VP of Investor Relations at Trevali Mining. Thank you so much for joining me today, Steve.
Thank you, Priscilla. I appreciate the opportunity.
So zinc prices soared last year, but there's some concerns that Glencore may reopen its mines, bringing more supply into the market. What are your thoughts?
That's a very good question. Probably a question best for Glencore, but given our comprehension and impression of the zinc market, we're really optimistic in terms of the outlook for zinc. I think going forward, looking at the potential for Glencore to restart its supply, you need to look at kind of their corporate philosophy. I think their CEO and president has been very vocal on maintaining a very disciplined approach in terms of commodity production. So I think, when Glencore does decide to bring those mines back online, I think it's going to be handled or done in a very orderly and disciplined manner. So I don't think they would have gone through all of the pain to put their mines on care and maintenance just to turn around and flood the market again. So I think it's one of those scenarios. Ultimately, you'll see those mines sequence in a very orderly manner going forward.
And aside from Glencore, what other catalysts could affect the zinc price this year? What should investors be looking at?
I think looking at stockpiles is important, LME stockpiles. It's important to keep in mind that the LME reported inventories, that is refined zinc. But I think what you don't see in the background is the market for zinc concentrates. That's a much more opaque market. But what we see, and a good barometer of that, are the TCs, or the treatment charges that smelters charge the zinc miners for their zinc concentrate. And what we've seen is those charges have started to drop dramatically over the last year, specifically the spot TC market and into China. About a year ago, those TC charges were around the $200 per ton of concentrate level, and we're currently seeing those pricing levels come down to about probably in terms of $40 to $50 per ton, and in isolated instances even less than that. So that's very encouraging. And I think one of the things to watch for is, what we see is the real lack of new production out there. We don't see any shovel-ready Tier 1 zinc mines that are going to come online anytime in the near future that are going to adversely affect the current zinc deficits in the market.
Okay. And as zinc, Trevali fared quite well in 2016 with record production announced in Q4. Do you expect to increase production even more this year?
I think given we've put out our forecast for 2017, and we're looking at producing about 160 million pounds of payable zinc production in 2017. Certainly that will be an increase from 2016, and we're going to continue to optimize and streamline our operations to extract as much efficiencies as possible and to increase this production as much as possible going forward. Outside of that, we do have a lot of organic growth in the company as well. We are looking at the potential to expand our operations at our Santander mine in Peru. And we're doing studies on that front. And also in the background, we're just getting an engineering study finalized on our half-mile and Stratmat projects in the Bathurst mining camp of New Brunswick. And that'll provide a pathway to the potential development of those two deposits, which are in very close proximity to our Caribou mine. They're about 30 kilometers to the south.
Okay. And it seems that Trevali is reaching its stride at a great time. Was that timing delivered, or was there a little lack involved?
Probably a little bit of both. I would take luck all day long if I can get it. We created the company back in 2007 and early 2008, primarily to take advantage of what we saw as zinc deficits looming. It took a little longer than we anticipated, but throughout that process, we successfully financed, developed, and built two producing zinc mines. So now that zinc is actually running, we seem to be on the cusp of a very bullish zinc market. And Trevali is uniquely poised to benefit from that, being the only primary zinc producer out there on the TSX with two mines in production, and certainly offering a very strong growth and very strong leverage or exposure to the commodity.
And finally, Steve, what other company milestones should investors be looking at in 2017?
I think on top of continuing to optimize our existing mines, we are actively drilling at both of our projects, both at the Santander mine in Peru and at our Caribou mine in New Brunswick. And I think what we're seeing is both of those deposits are open for expansion. So hopefully we'll be able to demonstrate some good success with the drill bit, be able to extend the resources, and ultimately look at extending the mine life of those two operations as well.
Thank you so much for joining me today, Steve. Once again, I'm Priscilla Barrera with the Investing News Network.